Hello, my name is Andres, and today I'd like to make a little walkthrough in the Tradingview. So in the upper left, we see the green dot, which means that the market is open, and when it's turned on means it's closed. The red equal line shows that the market information and market data that we are working with right now is not coming from the Nasdaq, but it's coming from the CBOE1, which is another exchange platform. It is done because Nasdaq is usually not for free, especially all the information, unlike CBOE1. So TradingView usually uses this information because it's almost precisely the same, but it's cheap and affordable. Then these green and red lines, they just demonstrate the information that we get from the candlestick. Like at this candlestick, we see that O means open, so the price was opened here at 367. Then we go to the high, which means that the higher point was right here. Lowest point is obviously here, and closing was right here. Here, all the numbers are presented here. We also have the digit number 5, which means which demonstrates the difference between this candlestick and the previous one. So we see that here is minus 3.2 and the closing 366, and this green candlestick right before that is 369.45, which is 3.123 dollars of difference. Then we go to the toolbar. We have the lines that we use for the support and resistance level determination of the uptrend or downtrend determination. Then we go to the Fibonacci retracement. This is a tool that we draw to have a better understanding of the price movements. We connect the swing low and swing high, and we see that whenever the price respects the line, we can wait for a tiny confirmation to make a purchase. So at this point, there are a couple of red candlesticks. They respect the line. We wait until the confirmation, which is this green line and green candlestick, and we see, yeah, okay, price goes up, so we can enter here and go buy. And here, for example, the price also hits the Fibonacci line. We wait until the confirmation, the next red candlestick, and we see the downtrend. So that's how the Fibonacci retracement used. Then we have the head and shoulders, which is a tool that we use to find the downtrend or uptrend. Depends on how the triangles look. So here we see that the three triangles form the figure of so-called left shoulder, head, and the right shoulder, meaning that in average price going up, demonstrated by this dotted line, but in reality the price went down right after the head and shoulder. Next tools are brush, that gives us drawing, text, we can text whatever we want, emojis. The measure tool shows us the difference between the values that we are interested in. So we see here that the price dropped between by 2,400 in this sector. It's just easier to look at this here rather than looking at the prices at the right part of the platform. We can zoom in or zoom out. So if we're interested in this part, we can zoom it in, and we can easily see whatever we want to see. In order to go back, we just go to the reset chart view. Then we have the magnet, which allows us to draw lines easier. They are like stick to the other candlesticks, and because of that, it's just easier to make those lines. Keep drawing function just allows us to continuously draw, so I don't need to press at the um, trend lines all over again. I just can do this continuously. The lock basically locks the tool, so it means that I will not accidentally move it. So yeah, if it's unlocked, I can accidentally move it. If it's locked, I cannot. Then I can delete everything, and then we go to the orders. We have the depth of the market, which shows us the limit orders, stop orders. So basically the bid and ask sizes. Um, we can see here that people will go sell if the price hits 78,900. 500 orders is placed here. So as soon as price goes there, these 500 orders will be activated, and the traders will be expecting the price to go down. The same works with the buy. The 3,000 people expect to entry as soon as price hits 78,700. We have three types of orders. Market orders allow us to make an trade instantly at this very point. Limit order shows the limitations. So, for example, if we think that the price will go to the 79,000 and then it will go down, we can make a sell limit order saying that, yeah, okay, price will go there, it will go down afterwards. So we will make this limit order. Uh, Stop order is the opposite. If we think that the price will be continuously going down, we will say, yeah, okay, at one point it will stop, and at this point I want entry. So we're gonna do the stop order on or on buy. Um, then uh, we have the images, copying download images that we're going to be using for the trading journal, and that's basically the most important part. So thank you very much, and bye.